In this video, 60 weeks of Bitcoin without an 11% increase, an absolute historical record, how to make more than 20 times on call options if growth does happen, and at the same time not risk a large part of your deposit, why the half-year expiration on $600 million worth of options. It shows that most likely we won't go below the 60,000 level. And right now, there is a good chance of a rebound to the 70,000 area, and now the traditional review of the weekly options strategy. Hello friends, this is the Optionomics channel, and I'm your host, Roman Besadovsky. Today, as usual, we will be looking for opportunities to make money with Bitcoin options, and I will share my view on the market. Let's start with what happened last week. Last week, in fact, nothing particularly interesting happened. That is, we had some interesting news, but you can't really say that Bitcoin reacted in any particularly interesting way. There was the Fed meeting that everyone was waiting for, and the rate was kept unchanged. In principle, there was even a relatively positive forecast that the rate would not be raised until the end of the year. So for the market, this was actually a good signal because previously the forecast was that the rate would still be raised. But at the same time, Bitcoin jumped up to 67,300 and even almost reached the options I had bought, 68. But in the end, it pulled back and closed around 62,000, I think, at expiration. So it turns out that there seems to be a lot of positive news. That is, there was no negativity from the Fed, nor from Iran and America. They apparently reached an agreement, even signed something there. But at the same time, it's suspicious that Bitcoin isn't growing. And of course, that makes me wary. The only thing that gives me hope right now is that call options on Bitcoin are currently very cheap. And usually I haven't noticed the market being able to fall hard and significantly when everyone is very scared. A bit later in the video, I'll show why I think everyone is scared right now. And right now, trades for buying put options are more interesting than buying call options. Still, I will also be buying call options because the nearest expiration is like a ticking time bomb. And there, once again, Iran, I think, has blocked the Hormuz Strait, so it's unclear what this will lead to. In fact, it's clear that the situation in the world is very unstable. Usually when bears get squeezed out, there are very sharp rebounds, and that's why I'll also be buying put options. So let's break it down according to our traditional scenario. First, the trade I made last week. I ended up buying options, 2 contracts each. I didn't want to take too much risk because after a good trade, I didn't want to immediately end up with a big loss. So I bought them, 268 call options at $120 each and 259 put options at $145 each. In total, I spent $567 on them. And since the market didn't go beyond the boundaries of the corridor, I ended up with this loss. And at the moment, the profit chart looks roughly like this. So I had that super trade when I hit a new high, and now, as usual, when you buy volatility, the chart gradually starts to decline. By the way, it's interesting. I think that in the near future, I'll record a video where I want to analyze these trades I've made using a neural network. Because very often, a neural network can provide some pretty interesting insights. But I think it would be better to do that in a separate video. So it turns out that the trade didn't work out, and let's move on. Let's start, as usual, by making a forecast. That is, let's make a prediction. Then we'll see what tools we can use to implement this forecast. And then we'll select the risks for the week so that, on the one hand, if our forecast comes true, we can make a profit. And if it doesn't, the losses won't be too large. So let's get started. So right now, Bitcoin is at the lower boundary of its sideways range. That is, if we look at the weekly chart, we can see that in February, it dropped to 60, jumped up to 81, and now it's back to 60. So over the past 4 months, we still haven't broken out of this wide sideways range between 80 and 60. And most likely we won't break out next week either unless some really bad news comes out. And here you can see why this level is holding. Because from March 2024 to October 2024, you can see that there was also a prolonged accumulation at this level. Usually, that's why a sideways range forms. Because those who wanted to sell are selling at this point. So if you remember, this level has been significant for quite a while now. It's a kind of zone, let's say, where delays occur. That is, first in 2021, the price reached this level, then pulled back. Then in 2024, this level was traded around for a long time. I think those who bought here decided it wouldn't go any higher. They exited at this point. After that, this level was broken through. And now we've come back to it again. And once again, we're holding at this level. That's why I think that if we go below 60, we'll definitely head towards 48 and maybe even down to 40, especially if this coincides with bad news on the global markets. That is, if something else flares up in the Middle East, or if the Fed, for example, makes some major announcement. At the same time, I'm not expecting any significant rebound for now. So over the next week, a rebound is possible in principle, but I don't think it will be strong. So I think that basically we could easily rebound to 71 or 72, and I'll show you why a bit later. And accordingly, based on these assumptions, I believe I want to choose a scenario in which I would make a profit. If the market drops below 59, that is, even though I think that next week will most likely be calm. But if all of a sudden some serious news comes out and it turns out that everything is bad, I would like to keep this black swan scenario in play. That is, I understand that in the current situation, there is such a possibility. Even though it's not very likely, if it does happen, options could easily yield, well, I think about 10 to 15 times the return, maybe even more. At the same time, my main scenario for this week is that I think there's a good chance we could rebound to somewhere above 68. Since this week we have a major semi-annual expiration and the max pain point, where in principle it would be most profitable for the options traders to close out this week and this quarter, is somewhere around 72. You could make really good money if the market moves there. That's why I'm relying more on the options floor this week. So it turns out that I think right now, option prices are low, and I would like to profit if the market breaks out of the range I've drawn. Just to clarify, our expiration happens next Friday at 4 o'clock p.m., so the market needs to break out of the range before this green line. Of course, it looks like the market probably won't break out, but given that options are cheap and the reward would be very good if it does, that's why I'm going to open this kind of position. So we've settled on the forecast. Let's also take a look at what additional factors we have that could make this forecast work. So what does the website Vela show us? By the way, interestingly, volatility has suddenly jumped for some reason. Let's refresh it. Yes, the short-term volatility has jumped a bit. Probably people are slowly starting to wake up for the trading week. But at the same time, look at this. That is, if you compare it with previous ones, if you compare it with previous periods, you can see that Bitcoin options are still trading quite cheaply. And despite the fact that the past week was highly volatile, the prices are still very reasonable. So I believe that right now it makes sense again to work from buying options. Regarding the latest trades, basically among the interesting ones, well, probably this trade of selling 64 puts for June 26th can be considered as a bet that the market will be above 64. That is, as usual, this is how I interpret large trades. If trades are happening somewhere around the current price, for example, if a trade occurs with, well, right now it turns out 62, 63, 64 calls or the same puts, this means that they expect the price to stay somewhere in this range. If I see that large trades are happening at some distant strikes, by the way, there aren't really any right now except for June 22nd, 59 puts. But the probability that they will be exercised is still very low at this point, only if there isn't a nuclear strike tomorrow. So if I see trades happening on far out options, then there's a higher chance that the market could move either sharply down or sharply up. And a trade like this, for example, suggests more that the market is likely to be above the level of 64 by June 26th. But again, since these are trades only within 24 hours, you really need to watch more closely. Overall, the open interest. So look, that is, what else do we have regarding Deltask? You can see that the fear has subsided, meaning there was, if we take a larger scale, for example, 3 months, you can see that at one point we were almost at the peaks. In terms of the level of fear, it's not as scary now, but it's still frightening. For example, if you look at how it was in April 2019, which is about 2 months ago, there was more focus on the call options. And if we look at an even larger scale, say over the past year, you can see that compared to the year, we are still at a high level. So the fear is significant. And it turns out that when fear is high, it's actually hard for the market to fall. And this also indicates that call options are cheap. So what we see is that options are cheap, but there is much higher demand for puts because everyone is scared that something might happen. That's exactly why I believe calls have a chance now. Now, why else do I think calls have a chance? Usually, when you've been trading on the market for a long time, this year marks 20 years for me. At some point, you start to get this persistent feeling that something is bound to happen when nothing has happened for a long time. And you could call that intuition. But in reality, it's also based on statistics. So, for example, here's what I see right now. I see that a record streak has been going on for 60 weeks already. I've pointed this out in previous videos as well. But before this, the maximum was 34 weeks. So since 2017, this is the first time that Bitcoin has gone 60 weeks like this. It can't grow by 11% in a week, which means that the bears have become completely brazen and the bulls are so beaten down that hardly anyone believes in this growth anymore. And it's precisely at such times when there's absolutely no faith left that strong, significant rebounds often happen. And that's why I believe that in the next 10, 15, maybe even 20 weeks, well, call options could provide a really good exit. And later I'll tell you how much you can actually earn with call options in principle. So we see that for 60 weeks, there hasn't been any real growth. It's been more than a year. It turns out that call options are still cheap, and I would also suggest taking a look at open interest. So as you can see, our largest expiration coming up is for $600 million. It's at the level of, not at the level, but on Friday of next week, that is, on June 26th. So this is a major semi-annual expiration. If you look at the max pain point, it's at the 72,000 level. The max pain point is the level where it's most profitable for option sellers to close the market. In other words, for the price to be at this level on Friday at 8 a.m. GMT. So if it closes like that, the option sellers who sold options will make the most money. So it turns out that three factors are coming together at once. A cheap call option, max pain at 72, and also this spike at 60. It indicates that someone has a lot of hedging that protects them if the price falls below 60. And usually when I see such large spikes, the market has a very, very hard time breaking through them. And it turns out that there are only 5 days left until expiration, so I believe that the chance of breaking through this spike is very small. But if it does break through, it could move a lot. That's exactly why I'll be taking the options route beyond this level. In other words, there's no point in taking anything close, like 61 or 62, because it could easily stop at 60. But below that, in principle, you can take it, because if, again, for some reason it doesn't hold, then yes, we might just break through. So that's what concerns open interest. That is, here, 72 basically acts as a point of attraction. Now, regarding liquidations. As for liquidations, you can see that there aren't really any liquidations right now, at least not any that are very close. There is a liquidation at 77, but it's unlikely we'll reach that level. If you don't look at such a large time frame like a month, but instead look closer, for example, at the weekly chart. So on the weekly chart, you can see, let me open it now. You can see that there's a level at 64,865, meaning there's not much below that. So it seems that everyone is probably so scared now that they're afraid to buy in, because all the long traders who could be taken out have already been wiped out. There are still some players left, and we could base our actions on them. Basically, that's probably all I wanted to say today regarding the analysis and review. Now, let's move directly to the position itself. First, as usual, let's go into our backtester. I've already uploaded the weekly data here. And so here's what the backtester shows. So look, this is exactly what I wanted to show you regarding the 69 options. If Bitcoin rises by 11%, that would be above. Right now it's at 64, so that would be somewhere around 71. So those 69 options should trigger right around there. So for example, if you take the 69 options right now, they cost $55. You can see it's been a long time since there was a good profitable trade. Since the middle of 2025, well, there was a tiny one here, just a little bit, but you can clearly see that the losing streak is very long, and you can see that this hasn't happened before. So Bitcoin has always moved by 11%. By the way, from 2021, it went from 0.9 to 2022, 0.7. That too, but that was also a losing streak. But still, it was shorter than the one we have now. And if this does happen, how much can you actually make? Let's look at the P&L. For example, let's say we buy here. Here it's bought. We bought 1.5 options for $96. If the market moves those same 11%, that will be about $7,000 from the current level. So that's around the 71 mark. So with $96, you could make $3,000. That's 30 times. I think that under the current circumstances, that's an excellent potential profit. And for example, you could hold on to this trade for about 15 to 20 weeks easily. So if you invest a certain amount each week, an amount you wouldn't mind losing, for example, 1% of your capital. I think that within 15 weeks, there will be a decent growth, even if it's after another drop. But during that growth, you could get around 30 times returns. I believe that this is very interesting. So this is what's going on with the 69 options. And let's build a position for this week. So 69, I actually think that $55 is, of course, really cheap. You can take something a bit closer. So I'll probably take 68. 68 costs, it turns out 100. 100. They were just recently priced at 90, but have gotten a bit more expensive. Yeah, so $100. If they go up by that same 11%, then it didn't rise to 3,200. Well, just add those same 30. That's what I said. First, we need to add these. Let's remove. Yeah, so here, the expenses are already $175 for 71,000, and they will be worth 4,400. Here, the profit turns out to be a bit less, somewhere around 25 probably, or 20 times 35,000 from half. To be more precise, here it's 4,426, 27, just a bit short of 30, but overall, it's still fine. But on the other hand, it's a bit more likely, so I'm adding this position to the portfolio, 68 added. And I also want to have puts, just in case, as they say, you never know what might happen. So the 59 puts, as I mentioned, I don't want to take the 60, 61, or 62 puts because they are above the 60 level. And I believe that if the market does go down, it might drop to 61 and then bounce back because the 60s will be defended. But the 59s in principle are already interesting. They cost $140. By the way, the chart for them also looks nice. Despite all the declines this year, put options are still being priced quite cheaply. The overall implied volatility is quite low. I'll add those to the portfolio as well. And this is the kind of position I'll end up with. So in this position, the risk is $420. If, for example, there is a major crash, the market could go down to 52. Well, I think it's quite possible to drop to 52. That would be a gain of 10 with expenses of 400. So that's roughly 20. Those very same 25 times would take it to 71. With expenses of 400, that would be 10. But why did the X's turn out to be lower? Because I want to hedge, including against a drop downwards. If I were only buying calls, of course, potentially I could make more on this. But I prefer a position that allows me to profit in both directions. And now let's think about what can be done regarding risks. So what about risks? It turns out that last week I was taking risks very cautiously. That is, I was risking 0.5% of my capital. Even less now, since there has been growth since the beginning of the year. I think now I can afford to be a little more aggressive. So if you analyze the yield chart, my maximum drawdown was when I dropped from 114 to 98, which is 16%. Actually, for cryptocurrency trading, 16% is not much at all. So in principle, I think it's quite possible to trade 1.5 times more aggressively than I am trading at the moment. But since, again, I'm making these videos for educational purposes, and I'm personally interested in how much such forecasts can bring regular profits, I won't go all out. And I'll take, well, I think $800 is quite reasonable. So let's go back to the tester project. Here it's 420. Here it's 1.5 each. So if we take 3 each, then we'll end up with about $710 ourselves. And let's backtest it. This kind of backtest chart looks great. Even in the low volatility year of 2023, it still looks excellent. I think that, I don't know why, but option prices are favorable right now. Maybe it's because it's summer. Usually in June and July, the market is calm. But I think that they're offering really good opportunities. So we've settled on the positions. We'll take 3 contracts of the 68 call and 3 of the 59 put, and we'll hold this position for a week. That's probably all for now. Friends, thank you for watching this video to the end. As always, I would appreciate your likes, comments, or any questions about options. I'll be happy to answer them in the comments. Or you can subscribe to my channel. The link is in the description below, and ask your questions there. And also, if during the week there are any strong price spikes, or for example, a move toward the boundaries of the purchased strangle. Then I plan to take some action with the positions, maybe partially sell or perhaps offset them with other positions. But I'll also write about that on my channel. This was Roman Besedovsky. See you again on the channel. Avtonomica. See you next Sunday. Bye for now.